So arguably, Mr. Donald Trump has a simple vision. If America buys less from abroad, then US factories will roar back to life, the deficit will shrink, and the US debt scenario will get improved. And it sounds logical, right? Stop buying from others, make your own things, and make America great again. But here's the catch: what sounds common sense on the election campaign stage hides a brutal economic risk. If America stops importing so much, it risks losing that one thing that has quietly been powering the US dominance for decades, and that is the dollar's status as the world's reserve currency. And that's where the real danger lies. America is currently stuck in an economic paradox, where on the one side there's a debt ditch which is getting deeper day by day, and on the other side is the risk of losing its dollar's reserve currency status. This isn't a far off theory, and the clock is ticking, and in the next few minutes I'll show you why Trump's Buy American dream collides head on with the dollar's reserve currency status. So before we start, can I request you to please like and subscribe, because this will help me to run this YouTube channel successfully. Okay, let's start. So the current global financial system is built with the US dollar as its reserve currency, right? And this simply means that most of the trades that are happening globally are most likely happening in the US dollars, like the majority of them. For example, an oil trade between Russia and India, Brazil buying oil from Saudi Arabia, and so on. So countries need dollars, trillions of them, to conduct their international trade on a daily basis. For instance, in 2025, over 79% of global trade was held, or you can say invoiced, in dollars. But where does this dollar comes from? Since obviously only America prints the US dollars, other countries must obtain the US dollars either by exporting goods and services to the USA or conducting international trade invoiced in dollars. For example, Russia may get dollars for selling oil to India, or a country can get dollars by directly exporting goods and services to the USA, as we talked about. So this world order forces the USA to run a trade deficit, meaning importing more than exporting. Only trade deficit can allow the dollars to flow out from the US to the rest of the planet. If the US runs surplus persistently for a long time in the future, then the dollar will not flow out of America, creating a scarcity for the dollar in the world economy. So basically, other countries will face strain in closing trade deals in dollars due to the dollar's crunch. And this scarcity will push nations to look out for new and alternative reserve currencies or a new financial arrangement, a process already underway in small ways, as you can witness. Evidence of de-dollarization is visible, especially in the commodity market, where a large proportion of the energy contracts is being priced or invoiced in non-dollar denominations. And of course, we have the BRICS discussions going on, where it can be sensed that an alternative of the dollar is being seeked out. Hence, eventually, if Mr. Trump succeeds in reducing the deficit and raising the surplus, then the dollar will eventually lose its reserve status. So this is the financial trap which economist Robert Triffin warned about in the 1960s. He said that to keep the dollar as the world's reserve currency, America must supply the world with dollars. And that happens majorly when America imports more than it exports. And you see, the world order has also evolved likewise. It's the current world economic order where the US is the net consumer or the net importer and is financed by foreign investments in the US bonds and other US assets. But of course, running these deficits for the USA has its own nuances. So first, as rightly Mr. Trump is concerned, the current economic order is a costing the manufacturing sector in the USA, and B, rising its national debt. Also, not all the dollars that go out of the USA come back as foreign investments. China, for example, invests, apart from the US bonds, it invests in other foreign currencies like euros and other emerging countries and the real estate. In fact, over the past decade, especially for China, it has steadily decreased its holdings from over $1.3 trillion in 2012 to roughly $759 billion in early 2025. So in a sense, it means that either the US works to reduce its debt and deficit, or rather save its reserve currency status. So the Triffin Dilemma warns that deficits are the price of reserve currency status, but that doesn't mean an automatic collapse overnight. So as long as US investors trust the US institutions and assets, the dollar remains dominant. Problems only arise when deficits are mixed with political mismanagement, huge fiscal slippages, or when a credible alternative reserve currency emerges. I think these days we are unfortunately witnessing all of them. Do you think the same? Let us know in the comments. So if confidence erodes rapidly, then history shows that these transitions can accelerate and may get the world to think of a new alternative reserve currency or a new financial management system. So yes, this is not new. The US is not the first global reserve currency. For over a century, it was the British pound sterling that ran the show. From the 1800s into the early 20th century, global trade from cotton to coal was cleared in pounds. But then came the slow decline of the British pound sterling. And why? Because we had two world wars that drained the Britain's finances, debt ballooned to record levels for the UK, and the US economy overtook the US in industrial strength. And finally, in 1944, in the Bretton Woods Conference, the US dollar officially replaced the pound as the world's reserve currency. So it didn't happen in a day. It was a decades-long erosion triggered by war, debt, and the rise of a stronger competitor. And of course, British pound sterling was not the only reserve currency before dollar. We had the Dutch guilder, the Spanish silver, which were the reserve currencies even before the British pound sterling. So reserve currencies, they do not crash suddenly, they actually fade with time. So coming back to our video on Mr. Trump's tariffs and the dollar dominance, of course the tariffs alone could not or cannot topple the dollar overnight. The dollar's dominance rests on a web of deep financial markets, legal institutions, and the lack of better alternatives. But aggressive and sustained policies that sharply reduce the dollar flows can accelerate or trigger the search for a global alternative of dollars. And once countries build that non-dollar systems, reversing that drift will be painful and hard. Historical patterns are consistent. Reserve currencies decline when deficits, debt, and loss of confidence combine. So I would rather watch these items to watch out for a transition from the US dollar as a reserve currency to a new one. First is that sustained declines in dollar-based foreign exchange reserves or big and coordinated sales of treasuries. Second is the rapid growth of credible alternative settlement systems like the BRICS Pay, Yuan, oil invoicing, and all those. And third is the fiscal or institutional shocks in the US that meaningfully erode the confidence. Do you think that some of these items are already happening? Let us know in the comments.